Good morning and welcome to THUB Capital, THE Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to THUB Capital's THE Investors Lounge weekly podcast. Today's date is the 13th of October. Let's dive into the week's top market news. European stock markets decline amid political uncertainty and mixed economic data. European stock markets recorded a negative week, with the Pan-European Stocks Europe 600 index closing down 1.10% in local currency. Investors opted for profit-taking after the index had reached new all-time highs. Political turmoil in France and international trade tensions also weighed on sentiment at the end of the week. Major stock indexes followed the same trend. Germany's DAX fell by 0.56%. The French CAC 40 index suffered a 2.02% drop. Italy's FTSE MIB registered a 2.80% decline, and the UK's FTSE 100 index eased by 0.67%. Recent economic data for Germany showed further signs of weakness. German industrial production plummeted by 4.3% sequentially in August, a much worse figure than expected that fueled fears of a recession. The main cause was a sharp contraction in automobile production, but the output of machinery, pharmaceuticals, and electronics also declined. A separate data release revealed an unexpected drop in exports in August, with decreases to the United Kingdom, the European Union, and the United States. In particular, exports to the United States, Germany's main trading partner in 2024, decreased by 2.5% compared to July and by 20.1% on an annual basis. In response to this picture, the coalition government unveiled an economic package to cut budget costs and support the automotive industry, which includes restrictions on welfare benefits and subsidies for the purchase of German-made electric vehicles. In the United Kingdom, the housing market is showing signs of slowing down. Reports from mortgage lender Halifax and the Royal Institution of Chartered Surveyors RICS point to weaker activity in September. The Halifax House Price Index unexpectedly fell by 0.3% month-on-month, after a 0.2% increase in August, disappointing analysts' expectations of a 0.2% rise. Despite this, the cost of a home has risen by 0.3% since the beginning of the year. RICS's measures of buyer demand and agreed sales remained in negative territory for the third consecutive month. The political crisis in France continues to be a major focus. Prime Minister Sébastien Lecornu resigned, ending the shortest-lived government of the Fifth Republic, after President Emmanuel Macron's appointment of a new cabinet was rejected by opposition parties. Jordan Bardella, president of the far-right Rassemblement National Party, has called for the dissolution of the National Assembly and new legislative elections, exacerbating the climate of uncertainty. Now our insight into alternative markets. European Biotech in motion. An analysis of startup investments and M&A dynamics. The European biotech sector is experiencing a period of significant dynamism, marked by a growing influx of venture capital and renewed M&A activity. While specific markets like Italy are showing strong signs of recovery, this trend is part of a broader continental context where innovation, institutional support, and strategic interest from major industry players are reshaping the future of the industry. The European venture capital VC market, following a period of adjustment, is showing signs of stabilization. According to KPMG's Q1 2025 Venture Pulse report, VC investment in Europe held steady at $18 billion, a figure consistent with the previous quarter. However, a decline was noted in the number of deals, 1,883, indicating greater selectivity and a concentration of capital on more significant transactions. Within this landscape, the biotech sector continues to be one of the most resilient and attractive. A significant driver of this momentum is strong institutional backing. For instance, the European Commission, through its European Innovation Council (EIC) program for 2025, has allocated approximately €1.4 billion to fund deep tech startups and SMEs, demonstrating a clear policy direction aimed at strengthening the continent's technological and healthcare sovereignty. Geographically, leadership in European biotech investment remains firmly with nations that have more mature ecosystems. The United Kingdom confirmed its top position by raising $5.5 billion in Q1 2025, followed by Germany and France with $2.2 billion and $1.7 billion respectively. In terms of focus, investors are showing increasing interest in cutting-edge therapeutic areas such as gene and cell therapies, precision oncology, and RNA-based platforms. The Italian biotech market is showing strong acceleration, with €127 million raised in the first half of 2025, which is more than half of the total for the entire 2024 €221 million. While preliminary, these figures are encouraging and align with the broader growth of the Italian startup ecosystem, which raised a total of over €1.43 billion in the same period. Source: BBs. Despite this growth, the Italian market remains modest in size compared to the main European hubs. However, the quality of its research and growing interest from international funds suggests significant potential for further development. The mergers and acquisitions (M&A) market is a critical health indicator for an ecosystem, as it represents the primary exit route for venture capital investors. After a transitional 2024, 2025 is showing signs of recovery on this front as well. The global context for the health industry sector, which saw a contraction in 2024, appears more optimistic for 2025, with analysis from PwC indicating increased activity from strategic investors like pharmaceutical companies. This renewed energy is exemplified by several significant transactions. A notable example is the interest shown by the private equity giant KKR in acquiring the Swedish company Biotech, a deal valued at approximately $1.2 billion. This type of transaction highlights the market's appetite for companies with established technologies and solid market positions. A key strategic driver fueling this M&A activity is the patent cliff, the impending expiration of patents on blockbuster drugs for many large pharmaceutical companies. This compels them to seek external innovation by acquiring promising biotech startups to replenish their product pipelines. The European biotech sector is at a turning point. The combination of a strong scientific foundation, growing financial support both public and private, and a market environment favorable to M&A creates a fertile ground for growth. In conclusion, the analysis of the biotech market can no longer be confined to a national perspective. Investment, innovation, and consolidation dynamics are deeply interconnected at the European and global levels. For startups, this means access to a broader pool of capital and strategic opportunities. For investors, it means a need for comparative analysis and a deep understanding of continental trends.
Thank you for listening to this episode of HUB Capital, THE Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about THUB Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the THUB Capital team.